You mentioned here what might be a trigger. I would say clearly the sense that, the discovery, if you will, that Cyprus was being asked to sell gold. And that, of course, immediately leads to the market suspecting that other hard-pressed countries might be asked to do the same thing. Nobody actually gives a hoot about, the 13.8 tons of gold that Cyprus has. It adds up to about $500 million. But if the market thinks that maybe Italy and or Spain and or Portugal were to be pushed into a position where they would have to sell gold, then possibly, there's a lot of downside potential for the gold price.
But Martin, I was just talking to someone from BlackRock.
I personally don't think that's going to happen, but.
Yeah, Martin, I was just going to pick up on that because I was speaking to someone from BlackRock, and actually the amount of gold that central banks can sell is limited, right? I think I'm correct in this.
Absolutely.
And so would it be institutional investors thinking, oh, they're going to sell in the next 4 to 5 years, I should sell off? It doesn't really justify, in my view, such a hard swing so fast.
Yeah, there's a little bit of front running. Yeah, there's a little bit of front running in this sort of thing. I mean, if you suspect that somebody, like a central bank might sell, and I think it's a wrong suspicion, but the market is the market. So if you suspect that that's what might happen, and you've been kind of looking, particularly in the United States, at your ETF position, and you're kind of wondering why you're holding this position because the equity markets have done quite well, you kind of come to the conclusion, well, maybe I should shorten up a little bit on these ETFs and, buy Bank of America or something. So you're getting that play in there. It's been well radioed or signaled that the gold market was getting a little bit sloppy. It was starting to feel a little bit heavy. We were getting down to certain barriers, if you will. And the question was that, more than likely, those barriers were going to be broken. But it's like everything else. You may think that, but you don't necessarily know the exact confluence of events that that break the camel's back. Having said all of that, I told the Denver Gold Forum this morning here in Zurich that we're actually somewhat constructive on the gold price. We think $1,300 on the gold price is low. We think it's an attractive buy, and I think in the fullness of time gold prices will go higher. Where I think gold is currently is in what I loosely call a mid-cycle correction in the long commodity cycle. Now, all these commodities are going through long cycles, but periodically there is a correction. And you'll note from the gold chart that there actually hasn't been a mid-cycle correction since 2001. I mean, we've had little corrections, but not really a dramatic correction whereby the year-over-year average price this year is lower than the previous year.
Yeah. Martin,
so
Martin,
I think that's kind of what we're starting to see.
Martin, very briefly, would you wait before you bought? Is there going to be a better entry point? Do you expect, at least in the short term, prices to dip further from here?
Yeah, I think that's a valid question, and I don't think anybody has a good answer for that. I heard through the grapevine that there were some emerging central banks that were actually nibbling in the gold market yesterday. So certainly some parties with deep pockets are coming in at these low levels. Personally, yeah, I think something with a low 1,300 handle is not unattractive. I don't think I would, make an allocation, 100% allocation of what I intend to allocate, but I would certainly nibble a little bit because you can never pick the bottom.